This is Rod Kusin and Spooman for Risk. It is February the 6th, and in this short video, or it may turn into a long one, we're going to explain a few more features of our automated strategy. We provide you with a dozen different strategies that have all been pre-programmed with a variety of different settings. And the idea behind this is that there is really no one set of conditions that will always prevail and give you the best possible trades. There's all sorts of different conditions that need to take place in order to generate profitable trades, and you can never really predict which of those is going to emerge. But there are certain basic fundamentals that if you follow them, you're going to succeed. And so what we'd like to do is just show you what some of these settings are and why it's important to continue to focus on the fundamentals. And the fundamentals are simply reading the premium. So what we're going to do now is take a look at just one particular strategy. We've labeled here the RSK Premium 1. It does not take into consideration the major moves on the premium. And we're going to superimpose what the premium is doing onto the strategy signals so that you can understand why you've got to watch the premium. So what I'm first of all going to do, I'm going to change this so that you can see it better. Now bear in mind, this does not take into consideration the premium. But let's just change that to this. We'll just use magenta. It'll stand out brightly for us. Whether we're long or we're short, we're going to use the same color so you know which strategy we're talking about. Okay. So from the, let's just go from this low. So this particular strategy setting, caught that low very nicely, which we talked about earlier in a previous video. But as you can also see, that same setting in the converse shorted it very soon thereafter. And here's the same strategy shorting as we move up to this top. But now what was the premium doing? All right, that's the question. And that's why you've got to take into consideration what it is doing. So here we have the strategy chart, and over here we have the premium. Now we're placing moving averages on a 750 tick bar premium chart. We're doing this so that you can really get the big picture of what's happening with the premium. And as the market came and hit this low for the morning over here, this is where the premium was. Okay, it had already moved up quite a bit. And for that reason, taking a long trade made sense. But more importantly is we had a series of naked bars right in here, which corresponds with this high here. Okay? So there we are at the low. And now we're starting to move up. Well, you already know that the market's going to go back up to around 37, 30, or 31, whatever that number was. So there's absolutely no reason to be thinking about shorting this move up. You really want to be looking at opportunities to go long. So it doesn't even make sense to consider shorting the market until we get right up here, which is back to the point of control. And when we get there, well, just shortly before we had another new high on the premium here. So you know this is, the market is long. The premium's got to become divergent, before you even think about taking a short trade. So here you come up to this new high and look at the vertical bar here, the moving vertical bar. That way you can follow along where the premium is as this market moves up. And there's really no valid reason to think about shorting this right now because the premium is not really divergent. We've got almost a new high on the premium here. Now, before we continue, let's just look at where the premium was here. The JMA at that time took us to a high of 137. Here we are at 147. Look at the first number on that JMA, 147. Actually, it went to 146. But we're not even up at the high on the ES yet. That doesn't happen until we get up in here. And now we're looking at a different story. Because if you look at the moving average, as we moved up to this high, and you look at these signals, you're now going to be watching the premium carefully. You know that you're going to be divergent as long as you are under 137 on the premium. And you're at 149, 148 when these signals take place. So now it's beginning to look more likely that this market could short because the premium is now truly divergent. And as we move up to this high, look at where the premium is again. Let me use it this way. Premium there is 153. Okay, we're definitely divergent. Okay, we're definitely divergent at this high. Okay, there we go. Okay, let's repeat that. So right as the premium comes down here, actually at the high on the ES, the premium on this chart is like negative 155. So way below the 157 that we were at previously. And we've moved right up to the projected upper value area on the market profile. With this, combined with the market profile number and a signal, that would have been a good time to execute a trade. So you're watching the major primary fundamental components of the premium, while at the same time the strategy is doing the thinking for you by examining all of the micro settings that you've established in your strategy. And now you just make a discretionary decision whether or not this is appropriate to take that signal. And I would say yes, that's a good time. Now, where's the market going to go? That, under the circumstance, you don't really know. It's made it up to a high here, which, what is that, 35. Okay, it's still below the 2737 value area. Oh, pardon me. That was yesterday. It's dropped to 2734. All right. So yeah, we're right there. we're right at that 27.34 level. And yesterday it was 27.37, but now it dropped. In any case, yeah, you're right there. That makes good sense. Good time to take that trade. Let's get back to our screen. Okay. So now you take the trade, you see what you can get out of this. But what happens? We come up and we test it again. Okay? And this time, now watch the premium. Look on the screen on your right. We come up to this high, we move a little bit higher. Okay? 35.50. We're still, well within the range that we ought to consider a short here in terms of the price, because the value area was 27.34.50. So a little bit above that, that's no big deal. But as we move up to the top here, again, now you're looking at where was the premium? Well, 142. Okay. The high is 137, so you're still divergent. So when this signal pulled off a trade, and you saw where the premium was, there's no reason to not take that signal. It's not much different than what you would have gotten filled at over here, maybe a few ticks higher. Okay. And certainly as this first short, which made sense, started to come back on you and you watched the premium, as you saw the premium move up again, there was plenty of opportunity to strategize on how you want to handle that trade, whether or not you want to exit, put in a stop, what have you. But there's another opportunity to get into here. And that's the discretionary aspect of these trades. Now let's move forward. So you take a short in here, and as you move down, you get this long signal in here. Does it make any sense to take that? Look at what the premium is doing. Okay? The premium is beginning to tank here. No, you don't want to take a long trade here. It doesn't make any sense. But right down here, as both the faster and the slower moving average are sloping up, it's a perfect time to take a long trade. However, at the bottom of this move, we don't have a signal. Why? Because we don't have a programmed condition that reflects what's going on with all of our other minor indicators. And so in spite of the fact that this is a great time to go long, as you can see from the premium, there are other prevailing conditions that do not exist right now within the strategy settings that we had established. Therefore, no signal. We know what the premium is doing, and we can tell you that because we have a strategy here that really acts more like an indicator. And this particular strategy, shown here, is designed strictly for the premium. We aren't showing you the signal, but if we do, that's where it is. And that is working just on the premium. And there's a few other minor conditions that we've placed within that strategy. So right here at the bottom, yeah, we got a signal. It just really wasn't a trade signal. It was a premium signal that just tells us what's happening to the slower and longer moving averages on the premium. Beautiful signal. All right, I'm going to leave those there just so that you can observe it. Now here we get a signal, and that's a nice move up. You make some money on it. But now let's start to look at what's happening to the premium again. Premium is moving up, and we come up to this high. Where's the premium now? Whoa. It's beginning to slope down again. And while this is divergent, this low right in here, where we had that signal, we're not at a low on the ES. We're at a higher low. So this isn't particularly predictive of anything. It's the way it should be, because there's a direct relationship between the ES and the premium. So we should be at a higher low, and we are. But now that we're at a higher high on the ES, here compared to here, we're at a lower high on the premium. This thing is coming down. We don't have any signals up here. Why? Because we haven't programmed into the strategy that particular set of parameters that would have called for a short. But you can see it on the premium. It's really obvious. So when you get a long signal in here, like right in here, that makes sense, okay? Because we're at a lower low on the ES here compared to here, but not compared to here. We should be at a higher low on the premium, are we? And the answer is yes. So this could result in a good trade. And, good reason, to go ahead and take that trade. Now, unfortunately, it doesn't really produce. I mean, you get a few ticks out of it, but you don't get much. And just watch the premium over here. All of a sudden now the premium is dropping again. And you get these long signals while that premium is dropping. That is not a good time to take the trade. Look at this, right? But you see how the premium then turns? Now, okay. Now, if we've got a signal here, that's a good place to pull it. Conditions did not exist within the other parameters of our strategies to pull a trade there. Instead, it pulls it over here. And what's the premium doing now? Okay, look at the slope here. Oh, that's beautiful. That's a good time to take a trade. And do we get a signal? Absolutely. Perfect. So, to emphasize it again, the minor decisions are what often distracts us from executing. We get all overly, well, I shouldn't say overly concerned. We get properly concerned that all of the conditions that we really should be monitoring are coming together, and then the analysis causes us to hesitate, and we don't take the trade. Here, if you wish, we can set up strategies to take care of all of the minor decisions and then allow you, the trader, to make the major ones, to make sure that the primary fundamental conditions that need to take place in order for the trade to work out, if those are prevailing, well, then you're going to get a signal and you're going to take the trade. Let's take a look at another aspect of our system just to show you how this takes place. Now, I'm not going to bother with whether the trade signals are going to take place at an appropriate time. I just want to show you how the automation works. So let's bring us out to the present, right? And what we're going to do is we're going to turn on strategy automation. As many of you know, or at least you should know if you've ever worked with automated strategies, this is a condition that exists within TradeStation. When you click on that button, any trade signals that the strategy generates are going to show up on the screen, giving you the option as to whether or not you choose to execute that trade. Now, these signals are all going to vanish here because we turned that on. That's okay. Okay, so if any of our pre-programmed conditions are activated, a window will pop up giving us the opportunity to decide whether or not to take the trade. And as you can see here, the premium is moving up, market is moving up. The first signal that we're liable to get here is a short signal, but it doesn't make much sense to take it, okay? Because the premium is moving up. We're getting into higher highs on the premium. So this market is long. So we'll just have to wait and see the trade signals pop up. Okay, so conditions prevailed that caused us to get a long signal. This is the box, the window that will pop up with a new strategy order that now gives you the option on whether or not you want to execute that signal or ignore it. And it's just that simple. The execution of the trade will then be recognized by the strategy, and whatever other conditions you've placed into the strategy, such as a profit target, a stop, and whatnot, are going to be activated if you execute the trade. In this case, we ignore it. Now, there is a time limit for the execution of the trades. That window will disappear if you choose to do nothing. So another way to look at it, if you're not inclined to take that trade, don't do anything at all, and the pop-up window will vanish by itself. Now, as we know that the premium is sloping up in general, we've moved over to a much faster read on the premium. And if we, as the premium turns here, which it will here shortly, if we're at some kind of a low in here, that might be a good time to take a long trade. So we'll just see if that pops up. Premium is going lower, getting ready to turn. There we have a short signal. I don't like the short signal. I'm not concerned about the short signal, but I want to get it out of my screen, so I'm going to ignore it. So here you can see the trade was entered into the trade manager. The market's going against us here. And there was an option to buy to cover that trade. All right. That was our stop. All right. So the stop also gives you the option whether or not you want to choose to take yourself out of the trade and therefore take a loss on that. But that's what, as I mentioned, as soon as you execute, all of the other conditions will activate. Your stops will activate, your profit targets will activate, and then once again, you're in a position where you need to exercise your own discretion as to whether or not you want to execute. Okay? Now, if this comes down, and I say, yeah, that was a poor decision, that didn't make sense, we can hopefully buy to cover at a profit if this drops low enough. Okay, the premium is going to drop here. And when it does, we should be at least at a point to break even. Taking forever. All right, here we go. And there we go. Out at break even. All right, so that's how that works. So hopefully now it gives you a little insight into the inner workings of our strategy and the extent to which personal discretion needs to be exercised when the trade signals pop up. But if you've got questions, I recommend that you give us a call, ask for a demo. We'd be happy to spend a good amount of time with you to show you how this works and why it may be of help to you in so far as your own trading system is concerned. So give us a call. I'm Rod Kusin, Spooman for Risk.